Today we are going to conclude our last part of chapter 10, which is the internal control, and today we are going to complete what did we start in the previous class regarding obtain and document an understanding of the internal control. Actually, we said that we have 4 phases to be followed by the auditor. The first phase is to obtain and document understanding of internal control design and operation, assess the control risk, design, perform and evaluate the test of control, decide, plan, detection risk and substantive test. Last time we started to talk about the first phase, which is obtaining and document an understanding of the internal control, and we said that the level of understanding of internal control and the test required for the audit of internal control actually need specific procedures to be done, and actually these procedures are to be done by the auditor in order to increase his understanding of the internal control. And we said that the auditor can use specific tools like narratives, flow charts, narratives, which is description of the part of the internal control, flow charts, diagrams that include the hierarchy maybe of the company, the sequential flow of the organization, to understand the operation of the company. And we said that we have internal control questionnaire, and this internal control questionnaire are questions to be asked to whoever is in the company from personnel in order to understand the internal control system. In phase 2, we said that we have to assess the control risk, and we said in order to assess the control risk, we have to check if the financial statements are auditable or not, and the auditability of the financial statement depends on 2 main items: the integrity of management and the adequacy of the accounting record. And we said before in another chapter that the integrity of management may affect the acceptance or the rejection of the engagement at all, and we have to take that into consideration while we are assessing the control risk. The control risk is the risk that the internal control is not effective enough in order to detect or prevent the material misstatement. And we said that the auditor, after obtaining an understanding of the internal control, he will make a preliminary assessment of the control risk as part of the overall assessment of the risk of material misstatements. The expectations of the auditor for the control risk will be depending on the understanding that he obtained in the previous phase. Step 3, design, perform and evaluate the test of control. We are now aware of the risk or the control risk in the company, so actually now we have to assess it through something we call the test of control, the test of control. And actually the auditor here will do the test of control in order to make sure that the internal control system is effective, okay, and it can reduce this risk of control. And actually we have 4 types of procedure for test of control, like make inquiry of a client personnel, which means you can ask the personnel inside the company. Okay, maybe you will ask one of the employees in the company and he will deny that he can access a specific computer files, and when you go to the IT department and ask, you discover that he has, okay, a password that give him specific authorities. Actually in that case that you can conclude that the internal control is not applied as it is in the manual of the internal control. So the inquiry of the client personnel can be taken into consideration by getting information from the people inside the company. Second is to examine document, record and report, which means you have to have an enough understanding of the processes of the company in order to find out what are the documentation cycle. And every documentation cycle will have a clear trail that you can trace in order to find out how the company is doing that operation. Yani for example, if I'm talking about the purchase cycle, from where is the purchase cycle is initiated, and then a copy will be sent for the warehouses, for example, and another copy will be sent for the procurement, and then a procurement will send a copy to the supplier. If I would like to make sure that the internal control are applied, I can follow whatever documentation is there to make sure that the company is applying that in a proper way. Some other activities are not traceable by documents as the one that we just talked about. And actually in that case, for example, you have to have some of observation of activity, which means maybe, for example, if I'm looking for if the company having has instructions for their security not to let in anybody except he has or she has an ID. What shall I do? Actually, if I'm going to ask, maybe he will tell me that nobody is allowed to get into the company. But actually, if I'm going to observe the gates for 1 or 2 hours, I can make sure that the security are actually checking on the IDs of all the entrants into the company or the premises. Because actually, if the security let anybody in, maybe you will not have a documentation for that, because actually he has no ID. So actually his entrance to the gates are not recorded in the books. So actually the observation here is very important to audit the application or the implementation of the internal control for the issues that cannot be traced by documents. The fourth one is re-perform the client procedures. I would like to make sure that the company is following the instructions in their operation. For example, if I'm looking for sales invoice and the sales invoice is requiring, the system is requiring from the salesperson is to go for the general price list and to get the price from there. Actually, he is doing that, but how to make sure that he got the right price? I have to re-perform that operation once more, which means I will get the invoice, the sales invoice. I will compare the price in the invoice to the price in the general list on the same date of the invoice. So actually here I would make sure by re-performing the procedure or the activity once again to make sure that the company are following the internal control procedure. Phase 4 is about planned detection risk and design substantive test. Of course, the planned detection risk, as we explained before, actually it is related to the audit risk model, where it is the audit risk divided by the inherent risk multiplied by the control risk. And once you identify the control risk and you looked to the control risk, actually it is time now to decide on the planned detection risk that you are going to use in that audit, and based on that planned detection risk you are going to design or select the design substantive test, because actually here the appropriate level of detection risk for each balance related objective is then decided using the audit risk model. Of course, the balance related audit objective is the existence, completeness, occurrence, accuracy. Sorry, occurrence, this is a transaction related audit objective. Existence, completeness, accuracy, all of these must be taken into consideration, but into more depth, which means the design substantive test, okay, are the into depth test to be done when you are assessing the internal control or the audit of the balances of the financial statement after you decided on the control risk, which means if the control risk is very high, so actually you have to design a specific type of substantive test. If it is too low, actually you have to do another type of the substantive test. The last part here is the requirement for the audit reporting on internal control. What are the main requirements here? Actually, section 404 or the Sarbanes-Oxley Act reporting on internal control, saying that the auditor opinion on whether management assessment of effectiveness of internal control over financial reporting as of the end of the fiscal period is fairly stated in all material. يعني the auditor opinion must mention that the management assessed the effectiveness of the internal control over financial reporting, and the auditor must also confirm or provide a reasonable assurance that the company management had maintained a good internal control, effective internal control over financial reporting as of the specified date. Actually, this will affect the type of the audit report that will be issued by the auditor. If you have no material weaknesses or no scope restriction, actually it will be with high probability that it is unqualified reporting or unqualified or unmodified report. One or more of material weaknesses, I think it will be an adverse. Scope limitation will lead to a qualified or disclaimer. So actually the amount of material misstatement or the risks level that we are going to face will affect, of course, the size of the sample, will affect the type of the test to be done, and at the end it will affect the type of the audit report. At the end here you can find that there is a report to be under the requirement of section 404 of the Sarbanes-Oxley Act. It is required from the auditor to issue a report, and this report is telling me, as you can see here, the definition of material misstatement. He is saying a material weaknesses is deficiency or combination of deficiencies in internal control over financial reporting, such that there is a reasonable possibility that material misstatement of the company's interim or annual financial statement will not be prevented or detected on a timely basis. In our opinion, because of the effect of material weaknesses described above on the achievement of the objectives of the internal control criteria, okay, has not maintained effective internal control over financial reporting. Yani here the auditor is reporting that we have a material weaknesses in the internal control system, and actually that the company are not maintaining an effective internal control. How did you know that? Based on the criteria established in the integrated framework to be issued by COSO, which is the Committee of Sponsoring Organization of the Tradeway Commission. Actually here the auditor is reporting that he checked on the internal control system and he is providing only a reasonable assurance. At the end he said that this company specifically has a material weakness in the internal control system. So actually here he can not guarantee that the internal control system is effective, and this is based on the criteria set by the financial reporting integrated framework, okay, or the internal control integrated framework issued by COSO. By that we ended the chapter.